Three checklists to determine the health of the US stock markets. They are the T-bonds, yields on interest rates, and inflation. If all three are in check, there will be a greater confidence that the bull market is still going strong. And we might even afford to be a bit more passive, adopting a buy and hold strategy. However, if only one out of the three is in check, I would avoid being passive and take a more proactive, vigilant approach. My name is Con Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. And before we get into this subject, please do take some time to read into the disclaimer. My investing strategy for the US markets transitioned from a passive long-term hold to a trading strategy beginning in 2022. This was the year where the bonds began breaking below their long-term uptrend. Interest rates started to climb, and we can see that the 10-year yield curve became inverted, and the inflation hit a high of 9%. The entire year was marked by turbulence. Anticipating this, at the start of 2022, my investment mandate was for the US market to trade them, for Asia market to accumulate them, for commodities, especially for gold, to buy them. Since then, we've seen strong rallies in the Japanese and Indian markets. And now the Chinese market is starting to take shape. Meanwhile, gold at an average price of $1,700 in 2022, it is now trading $1,000 higher. And I'm glad that the inflation checklist shown a better reading today, but the T-bonds and interest rate are still far from their safety zone. My investment mandate for this year has evolved. For the US market, I still prefer to trade them. For Asia market, I have transitioned from accumulating to buying them. For commodities and gold, I am focused on buying and holding them. As you can see, my strategy for the US market remains unchanged. I prefer to trade them than invest passively in them. And make no mistake that I'm not suggesting a downturn is imminent. With only one out of three factors in check today, I foresee an increase in volatility ahead. For this comparison in Nasdaq, we can observe volatility both before and after 2022. Before 2022, the markets were fairly trendy, but after 2022, the volatility increased with a much wider swing. Why is this so? Because of these three checklists. They were all triggered in 2022. Investing is not just about, is there still market growth potential? If our investment entry is not starting at a lower base, we must also account for potential downside risk. For many, investing can be a passive activities. And when danger arises, they may not even recognize it or understand the importance of managing risk. However, when I trade, I tend to be more proactive, anticipating potential markets turning points. This was what we shared in June when the Nasdaq was around 20,000. Then my target was 21,000, which was reached in July. I'll be monitoring this level closely and adjust my strategy accordingly. Are there any markets currently giving us the three positive checks scenario, where long-term bonds are still trending up and both interest and inflation rates are at its low point? I'd love to hear your thoughts on this. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to our channel. Feel free to leave any comments below. I'd love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.